Hi, welcome to the Market Alert for Wednesday, the 1st of November 2023. So, stocks spook for third straight month as World War III fears spark surge in US dollar, gold and crypto, not oil and not silver either. In other news, stocks and yields and dollar firm into end of month end and FOMC meeting, which is this evening. I've spoken about this for most of the week, but this is what the market's waiting for. So it could be a choppy one today until we get to this point. Also, ADP numbers, also a precursor to the non-farm payrolls, out at 12:15 as well. So let's have a look at yesterday's session, what the market's doing overnight. Kick off with the Dow. So in the Dow, we're moving to the upside. As I mentioned before, we've got the momentum moving to the upside as well. And also we've been oversold. We had the climatic volume, again, just reinforcing these points. We've got a high to the left here where we could get some resistance. I'll just draw that in for you. And also, if we were to use the fibs, we go from there to there, you can see that we've got some resistance at the 78 and 89 level as well. So watch those two numbers if you are a trader of the Dow. We've got 33292 where the last bit of buying ended, and then we went into selling in a shakeout, which we can see there. So in the 30-minute chart, we moved higher during yesterday. We then sold off when the market opened, the cash market that is. Then we were brought back before the close, and overnight the market's sitting above the DP and the close at the moment. In the German DAX, again, we've come off this oversold situation, climatic volume moving to the upside. Again, let's just have a look between here, and we're heading towards the 89, 78 at the moment, 89, and then you've got the high to the left there, which should pose a bit of resistance. That's at 14,958. And also the market's above yesterday's high already. I've just dropped down to a 5-minute chart. You'll see we're already steaming to the upside once more. We've seen this for the last few mornings, but then the market's opened, sold off a bit and then moved back up. But today we have got those ADP numbers at 12:30 and also the non-farm payrolls at 6 p.m. In the S&P, same picture. Climatic volume, momentum starting to switch to the upside, and again you've got that area of from this high to this high, the sort of small swing. So let's just remove that. So 62, 78 and 89 there on the upside if the market will move higher. Let me just remove this one from there, that's a bit clearer there. So yeah, on the S&P, that's what we're looking at. 30-minute chart, just sideways yesterday and then moving higher before the close to the 200 MA, sitting on the DP and coming off the low at the moment for this market. In the FT 100, also again the momentum is shifting to the upside at the moment, and also back above that 7323, and also coming off the 89% retracement there. Obviously resistance on the upside now if the market continues to move higher off the news today, and there you can see your target prices for this market. 30-minute chart, we were straight up yesterday morning and now we're down. Tomorrow's got the release of the UK interest rates as well, so that will be interesting. Market coming off the close nowhere near yesterday's low and above the DP and the 200 MA. It's got the high just above here, which is interesting because the DAX is already above yesterday's high, the only market that currently is. In the US dollar, up as it suggested in the headlines. So again, this has had a bit of an impact on the metals. Well, not gold, but certainly silver. So let's have a look at those now. So kicking off with silver, as I said, they're going to slam this all the way back down to $20. I can just feel it. As soon as they get the FOMC meeting minutes tonight, it's likely that from tomorrow we'll start to see this being crushed once more. It's already been moved down in the overnight. You can see yesterday it was just nothing but hammered to the downside. However, in gold, with the prospect of a third world war, you can see that they moved this up yesterday to $2,000 and then they hammered it down. So they're trying to keep gold below $2,000. It went up to 2,050 by the looks of things, and then it was brought back down. And this is what these so and so's are doing at the moment to give the just it's so easy to do with derivatives, because it's not the real price of gold or the real price of silver, it's a derivative of it, and it's easy just to keep the lid on the spot price by crushing it in these two markets. I mean, the irony again, broken record time. Silver $23. Well, it isn't even that at the moment. $22.50, and that's less than half the price it was in '79 and 2011. And we've had inflation. Everything under the sun has gone up, apart from silver. I mean, it couldn't be any more blatant, frankly. But there you go. It is what it is. One day we'll be allowed to move, and that's when the elite will all be piled in to make fortunes from it. So keep the lid on it, and then let it go at some other point when, like I say, all the big boys are in. A quick look at the gold silver ratio before we finish, and what a surprise, this moving to the upside. As I said yesterday, this market's heading towards the 90, no problem at all, then on to 100, because they're going to continue to crush the price of physical silver, or we're using the derivatives, of course. This is because of obviously the demand for solar and all of this other net zero crap that they keep going on about as well. So keep the price down, and it makes it easier to produce all of the solar panels and those electric car things that keep setting on fire as well. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.